All right, final episode. And before we go anywhere, if you've been with us since episode 1, seriously, thank you. Because what we're talking about today only really hits if you've built the foundation with us.
Let's do a quick run-through of everything. Episode 1, 2 dads, 2 mindsets. The way you think about money shapes your financial life way more than your salary ever will.
Episode 2, the rat race. That invisible cycle where your income goes up, your lifestyle goes up even faster, debt quietly builds, and one day you realize you're stuck inside a paycheck you can't afford to lose.
Episode 3, assets versus liabilities. One distinction that changes everything. Assets put money into your pocket. Liabilities take money out. And most people spend their whole lives collecting liabilities they genuinely believe are assets.
And episode 4, mind your own business. Your job is your income. Your business is your asset column. And building that column, slowly, intentionally, even while you still have your job, that's how you start creating a life that doesn't depend entirely on your daily labor.
And today, episode 5, the final layer, the one most people never reach because school never teaches it, employers never mention it, and the system quietly benefits from you not knowing it.
Taxes, corporations, financial IQ, how the rich legally keep more of what they make and use it to make even more.
Welcome back to Cash Talk Podcast. I'm Sara.
And I'm Ali. Let's finish this.
Kiyosaki opens this section with something that honestly stopped me the first time I read it.
What is it?
She says the biggest difference between the rich and everyone else isn't how much they earn, it's how much they keep and how long they keep it working for them.
And the engine behind that difference is financial IQ, specifically understanding taxes and corporate structures in a way most people never even learn exists.
And I want to be super clear here. We are not talking about tax evasion, not at all. We're talking about understanding the rules of a game that already exists, rules that are public, legal, available, but most people never learn to use them.
The game isn't necessarily rigged, but it is designed. And if you don't understand the design, you're playing at a disadvantage without even realizing it.
Financial IQ is understanding that design.
Let's define a few things today, because this episode has some words that sound heavy, but they're actually pretty simple once you break them down.
First, financial IQ.
Kiyosaki defines financial IQ as your ability to solve financial problems, not just make money, but understand how money moves, through taxes, systems, investments, structures. The more financial problems you can solve, the higher your financial IQ.
And like any intelligence, it's not fixed, it grows.
Second, corporation.
A corporation is a legal structure, a separate legal entity that can own assets, earn income, and expense expenses, independently from you. Think of it like a container. Money goes in, expenses go out, and what's left gets taxed.
And the key idea, and this is where it really matters, is when taxation happens in that process.
Third, tax advantage.
A tax advantage is any legal way to reduce what you owe in taxes. Deductions, credits, deferrals, structure choices, all built into the system. Not secrets, just tools most people never learn to use.
Fourth, earned income versus corporate income.
This is one of the core ideas in this whole chapter, and it's worth slowing down for.
When you earn a salary, taxes are taken before you ever see the money. You earn, they take, you spend what's left.
But a corporation earns money, spends on legitimate business expenses first, and then pays tax on what remains.
Earn, spend, then tax, versus earn, tax, then spend. That sequence difference in the right setup can completely change how much you actually keep.
And fifth, financial literacy compounding. This is the idea that financial knowledge grows like money does. Every concept you learn connects to another. Every good decision opens new doors. It builds on itself over time.
Okay, let's break down the tax picture Kiyosaki's pointing at, because this is where things start clicking for people.
So historically, and he talks about this in the book, income tax hasn't always existed in the way we know it. In the U.S., permanent federal income tax started in 1913, And originally, it only applied to the very wealthy.
But over time, it expanded. And today, a lot of middle-class salaried workers end up paying a very significant portion of their income in taxes.
And Kiyosaki's argument is this: salaried employees have very limited ways to reduce taxable income.
You earn, taxes taken, you're left with what remains. Not much flexibility.
But someone who earns through a corporation or owns assets has access to legal mechanisms that change the equation: expenses, depreciation, deferrals, and deductions.
And the wealthy don't figure this out alone. They hire people, accountants, tax advisors, attorneys, whose entire job is legally minimizing what gets paid.
Poor dad never thought about any of this. He earned, paid taxes, spent what was left. That was the system he was operating in.
Rich dad understood the system and used it.
Not to cheat it, to understand it.
And that difference is everything.
Let's talk about corporations for a second, because Kiyosaki really leans into this idea. And even if you're not forming one tomorrow, the concept matters.
So again, a corporation is a legal container, a separate entity, and one major feature is this: it can pay certain expenses before income gets taxed.
For example, business travel, equipment, education, vehicles. If they're legitimate business expenses, they can reduce taxable income inside that structure.
And Kiyosaki's point isn't go form a corporation and start writing off your personal life.
Yeah, please don't do that.
His point is that wealthy people operate inside systems designed for efficiency, while most employees never even enter those systems, not because they can't, but because they were never taught they exist.
And the crazy part is, a corporation isn't secret. It's a public legal structure. Anyone can form one. The knowledge gap is in how to actually use it.
And that's where financial literacy comes in. And financial literacy, like we've said this whole series, is barely taught in school.
You can graduate at the top of your class and still not understand how corporate taxes actually work.
So the gap isn't intelligence.
It's information.
Okay, I want to talk about something people always say: the rich get richer.
Yeah,
Most people say it like it's luck or unfairness or something hidden.
but Kiyosaki breaks down the actual mechanism.
The wealthy earn money. They route it through structures that reduce taxes. They invest what's left into assets. Those assets generate more income. That income gets reinvested, and the cycle repeats.
And each cycle, more capital is working. Each cycle, the structure gets more efficient. Each cycle, the gap between labor income and asset income widens.
It's not magic. It's compounding, applied to money and structure and knowledge.
Meanwhile, the salaried employee earns, gets taxed immediately, spends on liabilities, and resets every month.
2 cycles, same economy, same world, and the difference between them is mostly what you understand.
That can feel encouraging or frustrating.
Yeah, probably both. Kiyosaki breaks financial IQ into 4 pillars, and together they explain what financial intelligence actually is.
First, accounting, the ability to read numbers, income, expenses, assets, liabilities. Not like a CPA, but enough to understand your real financial situation.
Most people feel their financial life, but they can't actually see it clearly.
Accounting lets you see it, and you can't fix what you can't see.
Second, investing, making money work for you, understanding assets, risk, return, opportunity versus gamble.
And investing isn't just stocks, it's business, real estate, intellectual property, anything that produces value over time.
Third, understanding markets, supply, demand, cycles, how fear and excitement move prices.
When everyone is panicking, assets get cheap. When everyone is excited, things get expensive. Understanding that rhythm gives you an edge.
Fourth, understanding the law, taxes, structures, legal protections, the actual rules of the game.
And again, not about exploitation, about literacy. If you understand the rules, you can operate with clarity instead of guesswork.
4 pillars: accounting, investing, markets, law.
And none of them are really taught in school. Kiyosaki says something here that's uncomfortable but important.
What is it?
He says arrogance about money, thinking you already know enough, costs people money.
meaning I don't need to learn more becomes a financial disadvantage.
Because the system keeps moving. Laws change, markets evolve, new tools appear.
The wealthy stay curious. They keep learning. They ask questions. Poor Dad thought he already understood enough.
Rich Dad never stopped asking questions.
And that might be the quiet difference between them.
You don't graduate from financial learning.
You just keep going. Okay, let's bring this down to earth.
Yeah,
A lot of what we talked about, corporations, taxes, structures, can feel far away from where most people are.
so let's simplify it.
Please.
You don't need to do anything structural tomorrow. The real shift is mental.
Meaning,
Stop seeing the financial system as something that just happens to you and start seeing it as something you can learn.
that shift from passive to curious changes everything.
Because curiosity leads to questions. Questions lead to knowledge. Knowledge leads to options.
And options lead to better decisions.
One question at a time.
Before we wrap, let's zoom out and look at what we actually built across these 5 episodes.
Yeah.
Episode 1, Your Mindset Shapes Your Money Life.
Episode 2, The Rat Race Cycle.
Episode 3, Assets versus Liabilities.
Episode 4, Build Your Own Asset Column.
Episode 5, The System Has Rules. Learn them.
That's the full message of Rich Dad, Poor Dad.
And we tried to break it down in 5 episodes, which is honestly ambitious.
A little, but it works.
Quick recap. Financial IQ, solving financial problems, understanding how money moves.
Corporation, a legal container that changes how income is taxed.
Tax advantage, legal tools that reduce taxable income.
Earned versus corporate income. Earn, tax, spend versus earn, spend, tax.
Financial literacy compounding, knowledge building on itself over time.
And one idea from today, arrogance costs money.
Stay curious. 5 episodes, 1 book, and honestly, we've only scratched the surface.
Yeah, there's still so much in Rich Dad, Poor Dad. Real estate, businesses, financial statements, deeper layers.
If this changed even a small part of how you think about money, go read the book. It's worth it.
And I'll leave you with this question.
Go ahead. After everything, what's one belief about money you're ready to question?
And what's one question about money you've never asked before, but should?
And what's one question about money you've never asked before but should?
Think about that.
Seriously.
Drop it in the comments.
And this is just the beginning. Cash Talk Podcast isn't stopping here.
More books, more conversations, more breakdowns.
Because the goal stays the same. Build your financial thinking and your communication at the same time. That's the real edge.
Thanks for being here.
I'm Ali.
I'm Sarah.
This is Cash Talk Podcast. See you in the next series.